Markets now, shares in Asia were mixed this morning despite gains overnight on Wall Street that led to a record close for both the S&P 500 and the Dow Jones. Hong Kong's broader Hang Seng Index advancing 0.1%. Mainland Chinese stocks closed higher with the Nikkei in Japan falling 0.4%. European indexes were mixed as holiday-thinned trading continued in the region. Global investors are looking for a Santa Claus rally to close out a year of solid returns. The FTSE and the German DAX are on track to see gains of 15% for this year, while the French CAC is close to a 30% gain. In the U.S., all three major averages are in the green for December. The S&P and the Dow are on pace for a second positive month in the last three, while the Nasdaq Composite is on track for a third straight month of gains. With just 2 trading days left in 2021, the major averages are also on track to end the year in the green. So yesterday we were talking about emerging markets. We even showed you a chart looking at the emerging markets picture. And it's going to be the focus that we're going to be talking about, with emerging market stocks falling after 6 straight days of gains. And with increases in the coronavirus cases, there are some rising worries about the chances of a global economic recovery next year. And that chart is on your screen. The MSCI's index of emerging market stocks falling actually because of the China's blue chips and Hong Kong stocks sliding 1.5% and 0.8% respectively. The MSCI Emerging Market Stocks Index is set to end the year lower around 5%. Far underperforming and over the 25% jump that we've seen in the S&P 500. And this is because Russian stocks have fallen about 0.8%. Turkey's shares jumping 1.2%, and we're going to get to Turkey in a short bit, but also in South Africa, shares inching up, but with, of course, everyone talking about the stock index managing to at least hold on, hopefully to just over 73,000 points. But we're going to shift focus now to the Turkish Lira, because that has also gained a lot of the conversation over the past couple of months. We do see, right now we do have the Russian ruble on your screen, but we'll get to the Turkish lira right now. The lira was down around 2% at 12 per dollar on the day, bringing losses so far this week to 12%. The beleaguered currency had rebounded more than 50% from the record lows around 18 last week after the country announced some support measures, despite the central bank promising support. Worries persisting over soaring Turkish inflation and the unorthodox monetary policy. But what was quite interesting is the finance minister in Turkey saying that he's seeing inflation possibly moving to single digits in 2023. Analysts saying that is a very optimistic view, because right now inflation sitting above 21% and most likely to go even further, just above 30%. But as we shift focus to the Russian ruble, which is also another currency that analysts tend to focus on, especially when it relates to emerging markets, the ruble slid to a 1-month low against the dollar ahead of a phone call that we are expecting this afternoon between President Vladimir Putin and his U.S. counterpart Joe Biden at a time of strained Moscow-Washington relations over Ukraine. The currency was 1.1% lower against the dollar at 74, earlier falling to 74.81. It's the weakest since a month ago. The ruble has been under increased pressure, of course, from the geopolitical side since October, as Western nations have expressed concerns about Russia's military build-up near neighboring Ukraine. Trading is subdued and is expected to stay that way below average until January 10th, which is the end of Russia's New Year's holiday. That currency, of course, being supported by some of the current account surplus that we have seen in Russia, and some of the bank hikes that we've seen recently. Analysts saying that they are looking to be light emerging markets, and only because they don't have clear views on a combo of issues, whether it's the OPEC plus, whether it's US, China, Russia, NATO, Russia, Ukraine, as well as inflation in the US, as well as Chinese developers. Well, we now shift focus as the end of our markets coverage for this particular moment.